In this video, I'll share with you what Adam Khoo taught me on how to retire early. By the end of this video, I'll also share with you a finance Excel calculator of how it can help you plan and achieve retirement based on your goals and when you want to retire. I recently came across this tweet which I felt was quite good. Is investing in stocks versus holding cash risky? It all depends on your time frame. In the short term, stocks are riskier, cash is safer. In the long term, stocks are safer, cash is riskier. Holding too much cash over time guarantees you will not have enough saved for retirement. Everything in life is an opportunity cost. You can put your money in stocks, crypto, bonds. There are many places where you can put your money at. But as this tweet mentioned, if you hold too much cash, it will guarantee you will not have enough saved for retirement. I've mostly taken inspiration for this video from a webinar I attended recently from Adam Khoo last year, which is a no BS guide to financial freedom, how to retire early through investing. And in that webinar, he actually shows you a finance calculator where you can put in some numbers in order to plan for retirement. Well, I think that the finance calculator that he has is pretty good. There are certain aspects which I didn't like and felt it could be better. Of course, Adam Khoo is biased in a sense whereby he is selling his courses. But if there's one thing I felt that could be done better about this financial calculator, right, is consider things from a more holistic standpoint. The majority of us won't be professional investors, and I felt that I could do a better job in creating a better financial calculator. But I think the gist of what I learned from Adam Khoo when it comes to retiring is that how fast you want to retire entirely depends on your skill set as an investor and how to make as much money as possible, which I felt was not emphasized in the webinar at all. I have one of my colleagues recently telling me she wanted to retire by the age of 40, and while I thought that that was a very ambitious goal, I'm all about backtracking in terms of asking yourself, what can you do today to fast track yourself towards reaching your retirement goals at a particular age? And that's where I came about creating this Excel sheet in terms of helping me plan the general direction I want to go in. Is this the perfect financial calculator to help you retire? Probably not, but I can guarantee it will give you a better direction of what you need to do, okay? Because how fast you want to retire entirely depends on your skill set and your responsibility, okay? So let me show you how I would use this Excel sheet. Step 1, ask yourself how much of your income every month can you save on average? Let's say you put 35% here. For more aggressive people, they can put 80%. What age do you want to retire? Maybe let me put this at 55. How old are you this year? So let's say I am 25 this year. How much money do you want to have monthly to retire in today's term, okay? So keep in mind there's always inflation. A dollar today will always be worth less 30 years later, mostly because there's always inflation. Every year, prices of things go up and it's just the way of life, the market demands. Let's say I put $2,000 here. $2,000 when I'm 25 years old will be about $3,600 when I'm 55. This factors in an annual inflation rate of 2%. In layman terms, it means that every year, the prices of everything that you're currently buying will increase by 2%. So by the time you reach 55, this $2,000 will be about $3,600. Then the next question is, decide your target annualized percentage return on portfolio when working. I've made another video on dollar cost averaging into the S&P 500. The gist of this Excel sheet is to set yourself a goal on how much do you want your money to grow every single year. The reason why I've put 10% here is because if you close your eyes and just put your money into the S&P 500, you'll earn a 10.7% over a 50 year. That's a baseline percentage of how much you'll grow your money every year. The next question is, decide your target annualized percentage return on portfolio when retired. That means that when you retire, you want to shift all your retirement funds into something that's a little bit more safer, conservative, and that's where you can think of bonds, dividend REITs, or bank stocks. So I've lowered it to about 3%. Input your expected overall monthly income highlighted in the column estimated monthly income. So I will scroll down and then you want to put in how much you're earning monthly based on your salary. Let's say I'm only starting to work at 25 years old. So I'll scroll down here, scroll it to about 25, and I'll delete this. Everything in blue in this Excel sheet means you need to adjust it by yourself, okay? So let's say I'm 25 years old. Let's assume my salary is $3,000 every single month, and because I'm going to save 30% of my income every month, I'm going to put aside $900 every single month to invest in the stock market. Let's also assume I don't have a salary increment forever, right? And I have a monthly salary of $3,000 until I retire. I need to drag this all the way down to my retirement age, which is over here. That's where this graph is the most important thing over here. But before I get to that, let's go on to the next step. How much do you want to leave behind your kids, loved ones, and the next generation? Input whatever money that you want. Maybe it's $10,000. Some people don't want to leave anything for their children, so they might put $0. I'll just put $10,000 here for now. The next question is, make sure you have some wood around you to touch. At what age would you feel satisfied to pass away and leave this world? Okay, it's a very sad thing, but the whole gist of me asking this question is to make sure you have enough money until you pass away. So let's say put 90 or I think 85. I think 85 would be a good age. Once you fill this up, the most important thing you want to look at is this graph over here. If this graph is not going down too much, that simply means that you are probably safe to retire if you achieve a target annualized percentage return of 10% every single year. And this is entirely doable if you just put your money into the S&P 500. If you have not watched my video on how to dollar cost average into the S&P 500, I'll recommend to watch it. It's in the video description. As long as money in this graph does not run out, it means that you're probably safe for retirement. But let's say I want to be a lot more aggressive. Let's say I want to retire by 40. Okay, I'm 25 years old right now. I'm 40 years old. I'll change this variable here to 40. And instead of taking out $1,000 in today's term, I want to be more aggressive and I want to take out $3,000. $3,000 when I'm 25 years old will be about $4,038 when I'm 40 years old. One thing you will realize about this graph, right, it changes dramatically, right? It actually forecasts what your financials will be if you start taking out $4,000 every single month when you're at 40. If you invest $900 every month, this simply means that you won't have enough money. And if you scroll down here, I know it might look a little bit complicated. Anything in red simply means you have ran out of money. So I actually miss out deleting your income when you're retired. When you're retired, you shouldn't be working. So you need to delete the income over here. Okay, if I can repeat for this Excel sheet, if I'm 25 years old this year and I want to retire at 40, and of my $3,000 every single month, I'm only willing to save 30% of my income, and I invest $900 every month into the stock market, or I invest $10,800 into the stock market every single year, I'll run out of money when I hit 48 years old. So that's not good, right? Because the likelihood of 99% of people reaching 48 years old, chances are you'll still be alive. This plan is not feasible. So let's say my salary is still 3K forever. I save 50% of my income. I actually don't want to take out so much money. You need to be very realistic with yourself and truly reflect how much money would make me happy. If I ask you to retire in today's term, what money do you need to spend on? Do you want to go to nice restaurants? Do you need to pay for a car? Do you want to spend thousands of dollars on going to fancy restaurants? Or are you just happy with going to like a normal food court center and not having to work, right? So everything is an opportunity cost. Let's say I'm happy with a monthly income of $2,000. In this scenario, my money will last me until I'm 60 years old. By just adjusting how much money you save and how much money you take out, this will actually affect your retirement trajectory by a drastic margin. There's one more variable I have not talked about at all, which is increasing your income. There's a lot of talk between me and my friends about how they're not satisfied with how much they're earning monthly, right? And the question is, can you earn more money, right? Can you set yourself a challenge to increase your income every single year? I'm not expecting most people to double their income every single year, but can you increase your income by minimally 10% every year, right? So let's say I'm 25 years old, I earn a monthly income of $3,000. By 26 years old, set yourself to a standard to say that I must earn $3,100, right? So if I just adjust these numbers accordingly, like just 100 every single year, not even 10% every single year, just $100 every single year. And let me change this. One thing you'll realize is that the estimated monthly savings will also have increased because you have committed to saving 50% of your salary. Previously, our retirement age was at about 60, right? If you held yourself to a standard to increase your salary every single year, your retirement age will have extended from 60 to about 63. That's not much, right? Maybe this income is not enough for me. And maybe saving 50% of my salary is too much for me. Let me reduce this to 30% and maybe let me have a more ambitious target, right? Maybe let's say when I'm 25 years old, I want to start with an income of $4,000. Then I want to at least increase my income by $500 every single year. So let me change the numbers right now. Based on the assumption that I'm taking away this amount of salary every single month and assuming I'm saving 30% of my monthly income every single month and committing to this amount of money to put into the stock market to invest every single year, and assuming I want to take home $2,000 in today's term, which will be 2.6K when I'm 40 years old, this will only last me until I'm 68 years old. The next question is, maybe this target is not realistic for me because I think I can do my best to earn $11,000 a month, and that's really the max I think I can do. Let me delay my retirement age to 45. The moment you change your age from 40 to 45, you'll realize that your retirement money can last you until you're 89 years old. So by 89 years old, touch wood again, you'll probably be not around already. So this might be a feasible plan of how you want to aim towards retirement. Then again, to some people, earning $10,000 a month is something impossible for them, right? Not to say it's a self-limiting belief, but of course, everyone has their jobs. People have family, friends, things to commit to, right? Maybe achieving a $10,000 salary is just too hard for you and you think your salary will be kept out at $7,000. One thing I forget to adjust is to make sure you drag this to your retirement age, okay? As long as this graph does not decrease to a negative extent, that means you're okay. That means the rough plan you have should be okay. The bigger question to ask, is it realistic for you to earn this income every single month? Can you get a job or get some freelance gigs to help you earn this amount of money every single month? To some people, earning $10,000 every month is an impossible thing because they have kids to take care of. They have only so much time in a day. Based on their skill set and experience, it's impossible, right? Maybe you want to adjust your monthly salary to something that's more reasonable, maybe at $6,000 per month. So let me drag down $6 per month. Based on this assumption, your money will last you until 86 years old, okay? So the key point I'm getting at this, right, is that you need to plug in your own numbers in which you think is reasonable for you. Some people I know wouldn't accept any monthly income less than $10,000 a month. I know of some friends maybe at 30 years old figuratively, and maybe they're starting from zero. They earn like $10,000 every month, and maybe their income increases to $15,000. At the end of the day, it's the kind of standards you set for yourself and what you think is reasonable or not. Based on this amount of income, right, then I'm investing $3,000 every single month. I'm investing about $36,000 when I'm 29. And when I reach the age of 40 years old, I'm investing $72,000 every single year into the stock market to grow my money at a 10% rate. So in this case, my money is going up. Based on this income, it is something that is entirely doable. There are many variables you can control. One variable is how much do you want to save every single month. The second variable is to decide what age you want to retire. The third variable to control is how much money do you want to have to retire in today's term. If let's say you want a very luxurious lifestyle and spend $10,000 every single month, then you need enough money to sustain that. So even with this income over here, and if I want to take out $10,000 every month when I reach 45 years old and I'm 25 years old today, this $10,000 every month will be about $14,800 when I hit 45 years old. This is not possible because my money will run out when I'm 58 years old. So you need to adjust this. The fourth variable is to decide your target annualized percentage return on portfolio when working. This goes back to Adam Khoo's content. In his courses, he claims that he can actually beat the market by a significant amount. I don't exactly know what his annualized percentage return is over the 5-year, 10-year period, but if you want to commit yourself to learning more about finances, picking the highest quality stocks, which is what he always advocates for, maybe you want to increase this to about 18%. So if I increase this to 80% or 20% every single year, right, it would increase your retirement sum by quite a significant margin. But of all the variables I have listed here, I would say that this is actually the most unknown one and the most dangerous one, okay? Because things happen in the market when you're investing, or things happen to properties when you're investing, things happen to crypto when you're investing. Not to be biased against Adam Khoo, right? Of course, you can equip yourself with the skills to invest, but it's also very difficult to guarantee that can I really achieve this percentage return every single year. This graph is what I've put over here. If you want to grow your money at a 3 to 6% every single year, if you just put your money in things like bank stocks, which are very conservative, it gives you a 5.52 dividends every single year, and this is really easy. If you want to grow your money 7 to 11% every single year, then the S&P 500 is probably something that is suitable for most people. If you are actually able to grow your money more than 12 to 24% every single year consistently, I think you should be a full-time trader if you can grow your money at 24% every single year, because it is very, very difficult. But if you can do it, I really recommend you to invest full-time. But for most mere mortals like myself, maybe I'll just put 12% or even 13%. I myself, I do options trading, so I do supercharge how much money I'm getting from my investments. But even so, I'm also a little bit conservative. I would say of all the variables you can control, this is the most difficult thing to control. So let me be very conservative, I'll put it at 10%. Decide your target annualized percentage return on portfolio when we are retiring. So when you're retiring, you want to shift your money into fixed deposits, bonds, or very conservative stocks like these. So maybe I would say 4% would be decent enough for me. The next variable you can control is your monthly income. Put in how much is a reasonable amount of money you think you can invest in the stock market or earn every single year. Based on your skill sets, do you think you can earn more? And have a goal for yourself. Why not challenge yourself to earn as much as you can from your job or even taking freelance gigs on board, right? Yeah, let's say at 29 years old, I have a starting salary of $5,000 every single month. When I hit 32, right? If your boss is not willing to give you a salary from $5,000 to be more, then you probably need to challenge him. I have a retirement plan to retire by X age. Based on my retirement plan, I must earn this amount of money, because if not, I can't hit my retirement. Then you can challenge your boss to say, if you're not going to give me a salary increment from 5K to 5.5K every single month, then I'm going to switch job. And that's a challenge you need to pose to yourself. And this goes into career advice. I'm not the best person for that, but what I'm trying to communicate here is to have standards for yourself, to say that I need to earn this amount of income. For every single person that level might be different. For some people, earning $3,000 per month is very good for them already. For some people, earning $5,000 is the minimum that they must have. For some people, it might be earning $10,000 per month. Be ambitious, make plans. Let's say you're 29 years old this year and plan that by 35 years old, I want my income to be at least $9,000. Constantly work towards in your mind and ask yourself, what can I do to achieve a $9,000 monthly income? It should give you some incentive to know what you can plan on your side, what actions you need to take towards hitting a $9,000 income every single month. And this is something that Adam's Khoo financial calculator does not account for at all, right? I have a preference of shifting some responsibility or as much personal responsibility as you can to yourself in having standards in terms of wanting to achieve your retirement goals, right? So at the end of the day, these numbers are very subjective. You need to fill in the numbers that you want. The next variable is to fill in how much money do you want to have for kids. This variable you see at Q42 just indicates how much you have at the age that you pass away. So let me readjust this. Instead of taking home $10,000 a month, I'm happy with $3,500 every month. Let's say I prolong my retirement age to about 50 years old, and let's say I'm willing to save 35% of my income. I'm going to be working until I'm 50 years old, so I need to drag this down over here. At the age of 45 years old, I want to have a salary of at least $10,000 every single month. So based on this trajectory, my money will last me until I, touch wood, pass away. I want to reiterate that this Excel sheet is not a be-all, end-all when it comes to planning for retirement. If you're a Singaporean, you still have CPF payouts, right? So this does not even include CPF's payout. If there's one single variable I want you to focus on, is to decide how much every single year you want to invest. Okay, so this variable here in red is actually the most important thing. It's actually not your monthly income, it's how much you want to invest every single year, because it is this amount of money that will help you make more money. The next question to ask yourself is that if I decide to invest $21,000 every single year, how do I invest it? And the strategy I personally use myself is to take part of this $21,000 or whatever amount I'm investing every single year and dollar cost it into the S&P 500, of which I've made a video over here. So do go ahead and watch that video. The link of this Excel sheet is in the video description. There are many other assumptions I've wrote about this Excel sheet, of which I encourage you to read through. Please ask me any other questions if you have any, and I'll see you in the next one.